Hello, I'm Ananda from 5secrets.in and I'm going to talk about a topic that is really on top of your mind these days. And you can see most of us are confused about which product to invest in, FDs or RDs or gold, stocks and all that. So this video is going to show you how to move from confusion to total confidence. Sounds good, right? Yeah, let's move on and see how it's possible in just a short video. See, there are two sides to investment products. You may think, okay, people ask questions like this. Should I invest in FD? Oh, it's great. It's safe. But again, there's a catch to it. The taxes are high. What about gold? Gold is a safe haven investment and we think it won't depreciate. But what if it suddenly the price falls? And again, gold is not safe to keep at home. And anyway, gold jewelry is not an investment, you see, right? Because of loss in value due to making charges and wastage and also not being certified. Okay, what about stocks and mutual fund, you will ask? That's a good idea because stocks may be high risk, but I've seen a lot of people make a lot of money from stocks. Am I really losing out? You want to get into stocks. But what will happen if the stock market crashes? That has happened in recent past and then it might happen in the future also. Then the value of your investment will go down. So that's a risk. Then we say real estate is really very safe because value of land will appreciate and the value of my investment in will appreciate. It's a long-term investment and I'll physically hold that asset. But it is also the most illiquid of assets. We all know that, right? We will be in a difficult place when we try to encash that. So it's not easy to sell real estate. So what do we do? There are always two sides to investment products. And it is also compounded by even more confusion now that the economy is down and then there is COVID has come, SARS, Ebola, there have been other viruses and pandemics in the past. Wars have had influences on the economy and our savings in return. And whereas some companies like Reliance, Amazon, Google, etc., the shares of which have been rising. And one big fear that's in all of our minds is that, oh, what will happen to our job? Will we become redundant? Will we lose jobs because of business transformation and a lot of automation that is happening? That is another thing. So these questions lead to the main question, where do I invest? So some will say, okay, let me invest safely in a bank, though the rate of interest is very less. Or stock markets are down now, let me buy some shares. Or somebody else might say, just forget all that, let me stick to gold, it will never fall. Or some may even say, let me do nothing. See, all these confusions and questions exist, but the question is, how do I get rid of this, and are these the right questions to ask in the first place? That is a very important thing that you have to consider. So this slide shows on what basis should I make my decision. The most important slide and the most important statement in this video, you just have to ask yourself, what are my goals and milestones? That's it. Really, once you answer that question about goals and milestones, you will be on the path to financial security and wellness. Absolutely. So the key message that's going out is chase milestones and not products. What are milestones? Suppose you have a credit card loan that you have to finish off. First, do that. Very important to build an emergency fund in these uncertain times of up to 1 year of income. If you have life's necessities like building a house or car, be prepared for it. Make it a milestone and build a retirement corpus. And you have to preserve that corpus and make sure that you maximize your returns or optimize your returns to make sure that you have a comfortable life once you retire. How to manage this progress? You have to measure it, right? Whether you are doing. What you need to do, very simple. You have to understand which part of the milestone you are in. Suppose you are in the milestone of building a house. What are the financial products that are suitable for that milestone you find out and just build on that. Focus on that, build on that milestone. The first milestone and the most important, as I told you earlier, is to create that emergency fund of about 1 year's income. So that should be your first milestone. Once you have the emergency fund, then you have the bandwidth to actually go after your other milestones. So very important to keep this in mind. And see, we can actually reach these milestones with a good degree of certainties because loans are a burden. Therefore, the first step is to be aggressive and get rid of a loan, not home loan and education loan, of course, because they help you build long-term assets. Emergency fund has to be created. So you should not take a risk with emergency fund. When you're investing in financial products, for that, invest in safe products. But you need to borrow money for a milestone like education or building a house or a flat. And when you're building a retirement milestone while you are reasonably young or middle aged, you can take measured risk. So the risk taking ability, of course, reduces with age. So the younger you are, the more risk you can take to build your retirement corpus. Therefore, it is so important to start young. You can take more risk, you'll get more returns, and you'll be in a position to, in fact, retire even early. Who wants to wait for 60 to retire? You might be in a position to retire by 45. That's the goal you should go for. So, finally, how do we move from confusion to confidence? In summary, we have to understand which part of the milestone we are in, set clear deadlines for the milestone, and chase the milestones, not products. Very important. And make asset allocation, meaning buying the right financial products based on the milestone. And monitor your performance and rebalance portfolio as required. When your milestones or goals change, then the products may also have to be changed. This is a sure short way to achieve your financial goals without stress, my friends. Just go for it.